In this video, I want to introduce a new indicator on TradingView that will blow your mind. To add this amazing indicator to our chart, here we click on indicators and we search market pressure index. This one, which is a new and free indicator from Algo Alpha. Alright, this is the indicator, and as you can see, it is added here below the chart. It's actually an oscillator, and you can see that we have a type of dynamic histogram that is moving above and below the center line. This indicator measures bullish and bearish momentum by the help of a unique and special calculations that are based on volatility analysis and dynamic smoothing techniques. This indicator gives you a visual measure of market pressure, so helping you with trend identification, reversals, breakout opportunities, and take profit signals. This indicator is especially a perfect choice for scalping and day trading strategies because it can effectively show increasing or decreasing of bullish or bearish pressure that are happening in short-term perspective. As you can see, we have a kind of like dynamic histogram that the whole histogram can go above the center line or below the center line, not similar to other histograms like MACD histogram that we have bars on one side and then changing to the other side. Generally, when the bars are green, we have greater upside momentum, so the price is potentially trending up if there is enough bullish pressure, and when the bars are red, we have greater downside momentum and the price is potentially trending down if there is enough bearish pressure. As I said, the price is trending if there is enough pressure, because as you know, there are times that there is greater upside pressure or greater downside pressure, but not a strong movement of the price in that direction, just short-term swings of the price inside a trading range. So as you have the experience, we can have periods with higher downside momentum or periods with higher upside momentum, but the market is not trending. The price is in a trading range and moving flat, like here in this part of the chart, as you can see. This is exactly where most of indicators are not able to guide you correctly, and they just repeatedly give you false signals when the market is not trending. In this indicator, also similar to other indicators, you can see that we have color changing of the histogram repeatedly, showing a shift from downside momentum to upside momentum or from upside momentum to downside momentum. But this indicator is also able to help you know that these momentum changes are probably happening in a trading range, or they are showing a potential larger movements of the price. As I said, in this indicator, regardless of the color changing of the histogram, the whole histogram can go below the center line or go above the center line. This center line is volatility basis, and it will help us to evaluate the level of volatility in the market. When the whole histogram is below the center line, probably the market is in a trading range, and these color changings of the histogram are just very short-term momentum changes within the range market, and they are not worth of trading. And on the other hand, when the histogram is above the center line, I mean you see the bars are closing above the histogram, like here as you can see, this situation tells us that we have higher probability that the price is out of the range market and started a direction, and the direction of the breakout and movement of the price is recognized by the help of the color of the bars. If they are green, the price is advancing, and if they are red, the price is declining. So this indicator gives you the ability to know when the bullish or bearish pressure in the market is not enough, and probably the market is just moving flat regardless of short-term momentum changes, and when there is enough bullish or bearish pressure in the market, that probably the market is out of the range market and moving in one direction. We have also a line here which is upper deviation band, and it will help us to know when we have very high volatility in the market, which gives the possibility of very strong bullish or bearish pressure in the market. When the bars go above this line, it tells us that probably we are going to have a strong pressure in that direction. So when the bars go above the center line, it shows probably we are out of the range market and the price is probably going to trend in one direction. And when the bars go above this line, it shows probably there is high pressure in this direction and more movement of the price is expected. So crossing of the histogram above the center line can be used in breakout trading strategies where you want to enter a trade when the price breaks out of a range market, and breaking above this line can be used in trend following strategies or momentum strategies where you want to enter a trade when there is high bullish or bearish pressure in the market in one direction. To make your analysis even more accurate, you can add another indicator like ADX, this one, average directional index, and use them together so you can have better insight on what is happening in the market. As you know, ADX is an indicator that can help you with trending and non-trending market. When it is above 20, the market is trending, and when it is below 20, the market is not trending. It doesn't give any information about direction. It only tells you if the market is trending or not trending. We add a horizontal line here at 20 so we can better track the movement of the ADX line, and also we add another line here at 40 so we can know when the price is probably at high levels and maybe exhausted. For breakout signals, when we have a bar above center line, we also check ADX to see if it is above 20 or not. And for high pressure signal, we check if ADX line is between 20 and 40. If it's above 40, we don't take it because it's probable to have overextension of the price. With this signal, the goal is to catch the sudden high pressure in the market, which usually doesn't last so long. So to decrease the risk, we put this filter here. So this signal here is confirmed and we could enter a long position at this point. From here, you can see that the histogram totally went below center line, indicating range market. ADX is also below 20, further confirming that the market is not trending. Around here, you can see that we have the bars above the center line, but ADX is not confirming, and this was correct rejection because as you can see, we didn't get any breakout at this point. Moving on the chart, here we have the bars closed above the center line. ADX is also above 20, so the buy signal here is confirmed, and we could enter a long position at this point at this pullback, and you can see how the price advanced after that. Or look at this signal here, which shows high buying pressure in the market. When we check ADX, we can see that the line is between 20 and 40, so this is a confirmed buy signal, and we could enter a long position at this point, and this would also be a profitable trade, although we got a pullback before further advancing of the price. This indicator is a very powerful tool that can help you to effectively measure bullish or bearish pressure in the market and find trading opportunities based on break out of a range or momentum and volatility increases during trends. You should never take your trading decisions only based on this indicator, and you must use this indicator in your trading strategy in conjunction with other indicators or aspects of technical analysis so you can make trading decisions with higher probability. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.